All right, well, we're going to go ahead and get started. And like I said, good afternoon, good morning, and thank you very much for joining and for your interest in C-PACE financing by PACE Equity. My name is Ethan Elser, and I'm EVP and principal here at PACE Equity. I'm going to be joined in just a second by one of our customers who we're very appreciative to have on, but I'll introduce myself quickly before we jump in. My role at the firm is working with our national sales team. We have a coast-to-coast originations team of 25 people. We work all across the country. We'll look at what markets we're in and what's coming up soon as a part of this webinar. I also oversee our credit and underwriting process. I'm a principal with PACE Equity and have been here almost exactly 6 years. Joe, would you like to introduce yourself?
Yes, thank you, Ethan. I'm Joe Caradonna, and I'm the co-founder and managing director of Kukar Management. I've been in real estate and development my entire life and a licensed builder for over 27 years. Kukar Management specializes in real estate, mergers, acquisitions, and operations of companies that provide mission-critical products, services, and solutions in diverse industries across the globe. And most notably, we're in hospitality and food service. We are a PACE customer and very happy, and we're happy to be here. Thank you for having me today.
Thank you, Joe. We really appreciate it. And I know a lot of people are interested in hearing a customer perspective on working with PACE Equity and the PACE program. So let's jump in and let's start at the top. You know, in a sense, why we're all here. We're trying to learn about PACE financing or trying to gain further understanding if you know a little bit more about it. So let's start at the top. What is it? So PACE is an acronym that stands for Property Assessed Clean Energy. And quick note, today we're going to be talking about C-PACE. The C is for commercial, which is what PACE Equity funds. PACE is a state legislated public-private partnership. What the legislation does is sets up a framework for private capital to fund specific items in a building's construction budget, which has a tangible, quantifiable utility, water, or renewable impact. So just kind of to bust a myth, this isn't a federal program. Each state actually legislates this individually and puts in place at the state level. So there's no federal oversight or guidelines or involvement. So in some states, you can also fund things like seismic improvements, like stormwater management, some potpourri items, things like that. The capital all comes from private firms, and the repayment of the capital is through a long-term special tax assessment on the property. So in a sense, the big picture is that the government, the public, so to speak, they're trying to encourage energy efficiency, economic development, and job creation without putting taxpayer money on the line. So to accomplish this, what they do is let a private firm like ours borrow their taxing authority for a specific project that has this kind of public benefit. So speaking of benefits, I'll say in general, and we'll hear from Joe a little bit, you know, what he views the benefits for his various projects that we've worked on with him. But in general, there's a little bit of the eye of the beholder. Every one of these projects has a slightly different value proposition. But our capital is long-term, fixed rate, non-recourse, and typically about half the cost of equity or mezzanine financing. This makes us a great replacement for more expensive capital in your capital stack, filling a gap in your capital stack, or limiting the amount of, say, outside the house equity or partners that, you know, has to be raised. You can keep the project control, you know, really amongst yourselves or yourselves and limited partners. All of these benefits serve really one core thing, which is to boost your project returns, and including that you don't have to make sacrifices to, you know, VE out your energy efficiency goals. In other words, increased NOI and value, lower cost of capital equals higher returns for you and your project. We like to say good for your planet is good for your building as well. In general, we can fund any kind of commercial building. Really, the core of what we fund are your kind of bread and butter commercial real estate projects: senior housing, office, multifamily, hospitality, retail, industrial, but we can also do special use assets as well. One key thing that you always have to remember is that, in a sense, we provide construction financing. Now, there's many different scenarios we can fund that in, but we can't fund, say, an acquisition of a property or something like that. But in general, we can do very broad construction projects: renovation, value add, CapEx, redevelopment, ground up new construction. The West Coast, seismic only projects, and some other states around the country. We can work with very complex capital stacks like new markets, historic, TIF, things like that, or very simple projects as well. We can often actually serve as kind of that last dollar. If your project, again, whatever the nature of it, is looking for gap filling financing, this is a really great option and alternative. During COVID as well, we've also been funding what we call retroactive refinancing projects. And in fact, one of those projects was with Joe, and we'll hear a little bit more about it later on. In about 15 states, and we're going to look at a map coming up in a minute of where we can fund, we can come in mid-construction, at CO, in some cases, even up to 3 years after the property has been completed or you've installed improvements. And like I said, during COVID, this has proved to be a really needed lifeline for liquidity, for debt service payments, working capital into the business, for those asset classes that have been hit particularly hard and need to make it to the other side of COVID. And so this was an example, again, we're going to hear about it, that we worked on with Joe and his team, of a just completed new construction Cambria Hotel in Shelby Township, Michigan. We funded right at CO to help cover some of the costs of COVID and make sure that they get open and stabilized, in a non-pressure way. We can also use this tool to refinance, equity or mezzanine funding out as well. So a lot of people ask, what assets do you fund? What kind of improvements do you fund? How do you know if something is qualified? And that's part of what we do. Each state, as I mentioned, has legislated this a little bit differently. So, for example, in Minnesota, we can't fund, water improvements or improvements that save water. But in general, we can fund any item that has a tangible utility, water, renewable impact, lighting, windows, HVAC, envelope, plumbing, in most cases. But what value we can add to you is our team of experts would be happy to review your construction budget, your schedule of values, maybe just, your hard costs at this point, looking at the state requirements and determine how much may be eligible to fund for your specific project. So looking at now, where do we fund projects? There's 25, 26 states that have this kind of public-private partnership set up. And again, a lot of people ask, well, why is it in Wisconsin and not Iowa? Why is it in California and Nevada, but not Arizona? There's not a lot of rhyme or reason to say why it's in one place or another. It's like passing any legislation. Sometimes it's a little bit, happenstance, right? But there are, lots of great states where we can fund projects. There are more coming soon. One thing we offer to our clients is that we have a coast-to-coast local originations managing director team. We believe, firmly that real estate is a local business. People want to know the people they're doing business with, meet them in person, not obviously being, of course, sensitive to COVID. We can offer that, in almost every state around the country. So we talked a few minutes ago about, in a sense, what the benefits are, how to leverage our capital to enhance your returns. This is a great illustration of kind of the win-win-win of PACE funding from PACE equity. You can reduce your cost of capital, you can replace more expensive capital in your capital stack, and you can increase or maintain, say, the energy efficiency items that you want. Again, it's a real win-win-win. This is an actual project, a hospitality project that we funded where there was a 33% in the overall IRR of the project thanks to our financing. So again, very strong from a return standpoint, but it also really enhanced the property NOI by reducing operating costs for the owner operator. So it actually boosted the overall value, again, contributing to part of the financial impacts of using PACE equity financing. And just to show you how we can optimize your capital stack, look at this as a before and after. we were able to fund 20% of that new construction hotel off of the total project cost, and really, again, leverage improvements in the overall returns. Through our fast track process too, we're going to talk about that more in a couple of minutes here, the developer didn't have to make any design changes to their project. So again, we were able to take advantage of the built-in efficiencies they were already doing using our in-house engineering team. We were able to fund a substantial amount of the capital stack, again, without making any of those changes. Depending where you are in your process, we can either confirm the energy efficiency you're doing or actually integrate with your design team to optimize your energy efficiency and savings without driving substantial cost even more as well. So, you've learned a little bit of the basics. This is a great fit for all sorts of commercial construction projects. PACE Equity funds a lot of new construction development projects, but frankly, if you're considering a project that you're going to be doing HVAC, lighting, windows, solar, it's something, if it's in one of those states, that we should take a look at. So this is really a new form of commercial real estate financing in the marketplace. And just like I'm sure many people here today, they're not familiar with PACE financing. Part of what we do, part of the quality control, and we believe strongly in this, is having the mortgage lender approve. And there's probably people on this call who say, okay, I'm very interested, but my lenders expressed some hesitancy. They've never heard of it. I really want to do it. How do you get them comfortable with it? So that's a part of our services. And frankly, 8 out of 10 deals that PACE Equity funds have lenders who've never consented. They've never seen PACE in the capital stack, or maybe they have a misunderstanding about how the mechanism works. We'd be more than happy to meet with them, go through this education, similar to some of the points here today, and get in even deeper. This is a program across all parts of it where the details really matter. So just briefly to introduce the concept of how lenders get comfortable with our participation, here's some of the key reasons. First and foremost, we have a fixed rate payment structure, fixed amortization, and we have essentially no call, no acceleration clause built into our structure. And whether that's on a default of your mortgage or your construction loan, or default on your payments to us, we can in no circumstances accelerate, balloon, rate reset. So what that really does is mean that our payments are very predictable. A lender can underwrite to them. They can understand, okay, I know that this payment has to be made, and I know exactly what that is year 1, year 20, and that's something that we can get comfortable with. It's something now we can underwrite to. I don't have to worry about some kind of $2 million, say, tax assessment on a property. It's just a fixed payment every year of $150,000. We also really don't get involved or limit at all the lender's ability to foreclose. The lender retains first position. They're able to control the asset, enforce their mortgage. They don't necessarily have to work with us or involve us in that process. And we look at ourselves really like a partner in these projects. So of course, we're going to call the lender, work through with them if there's some kind of issue, but we certainly don't have to do that if not needed. We also underwrite to joint standards. And I think just personally, that's a very important thing. We can be very accretive to a project's capital stack, but that doesn't mean there still shouldn't be some cash equity, sufficient debt service coverage. Again, we at PACE Equity believe that's very important. So as we communicate to our lending partners, we're understanding where that box is. Let's come up with joint underwriting together that gets everyone comfortable, but most importantly, leaves a cushion in. Another aspect that lenders feel very comfortable with, and again helps get comfortable, is that our financing can transfer upon sale. Whether that sale is, say, a foreclosure sale or a market sale, you can run us right along with the land with no penalty, re-underwrite approval, or we're also prepayable at any time. So we give a lot of flexibility to the client and to the lender. Finally, remember too, that what we fund are those specific items, HVAC, windows, lighting, in a construction budget. They have to be better than code, or maybe what's in the building currently. The bank is getting better collateral value because there's these enhanced improvements in it. We're not funding carpet and drywall, things like that. We're adding things that have a tangible, drop in the overall NOI and an impact, on the property operating statement. Again, these are just a couple of the reasons that we go through as we work with a lender who has not worked with, us or PACE financing in the past. Another thing I think that's great to share before we hear a little bit from Joe, there's over 200 lenders around the country who've looked at, PACE as a capital stack tool or for a specific project and said, yeah, this is something we can get comfortable with for this specific project. And it's lenders, frankly, of all shapes and sizes, from HUD to the Wells Fargo and US banks of the world, local banks, credit unions, debt funds. We work with them all. So it's a very broad list. Again, gives a lot of comfort that a lot of different eyes have looked at this and signed a document saying, yes, we approve of this in a specific project. So now that we've learned a little bit of the basics and what the value is and where it's a fit for projects that you may be considering, again, we're very appreciative of Joe taking a few minutes out of his busy schedule to talk to you about the customer side and the projects that he's done with us.
Thanks, Ethan. So we're proud to say that we've completed over $11 million in PACE financing, and it's really been a great program. We'll speak a little bit more about that at the end, but just to let you know some of the projects that we have used PACE on, we started out, our first deal with them was a Cambria Hotel Detroit. We had a $7 million PACE, which, Ethan, if I'm not mistaken, was the largest in Michigan history. So that was an interesting one. And it's a 158-room hotel. We have a celebrity chef curated restaurant and full banquet facilities, as well as lease retail. So it was a interesting project. And of course, building that through COVID pandemic has been fun as well. But PACE has been there and supported us through it all. Our next project we did was an industrial building that's going to be a tenant for an electro-optics manufacturer. So it was a building we purchased with the thoughts of just leasing it to a regular old tenant. Next thing you know, we have a $19 million build out going on in this building. And we needed extra cash because it's just a tremendous build out. And moreover, very unique. So super advanced and highly efficient heating and cooling mechanisms, lighting, as you can imagine with any kind of specialty manufacturer. We were able to utilize PACE to get us that extra cash to help us to get that project going and get that tenant signed up, and they'll be moving in September. And then lastly, again, as we were going through the pandemic, we were building another hotel in the suburbs of Detroit. It's one of our, it's in my hometown, so it's very dear and near to my heart. And it's the Cambria Shelby, 98-room, again, with a celebrity curated restaurant inside. And thankfully, we've been doing extremely well. The community's come out in droves, and we've seen sellouts on the weekends, our restaurants doing better than we could ask, and everybody's come in. But here was another situation where PACE worked with us in a unique timing and said, look, we're here, we're over budget, we're out of time with our lender, what can you do? They looked at all the efficiencies that we already built into the building and were able to get us about $3.6 million to finish the project, open on time, and have working capital in place so that we could be successful. So I have to say that in every aspect that we've worked with PACE, it's really been a enlightening and great experience. I think Ethan probably asked me today, because as I was selling it to my lenders, I think you heard how passionate we were because we were just so thankful that they were there for us. So I'll kick it back to you, Ethan.
Thank you. And likewise, you've been so great to work with, and we really value the partnership and relationship that we have with you and your partners and team as well. So it'd be great, Joe, just to hear, again, from your perspective, about, the value, and it's great we've done such different projects, and I think the audience got to hear a little bit of, what the value is, but, what would you say, and broadly or on, on each project that the value was of using, CPACE in your capital stack?
So as many of you may be developers on the call, our biggest commodity and asset as a developer is cash. So using the CPACE program, we're able to lever that cash, as Ethan showed you earlier in the stack, and keep more of that in our pocket. Right now, we have 3 major deals underway with PACE. We might only be able to do 1 without them. So we were able to spread our money around to get more done. And thankfully, as prices have continued to go up and things like that, some of these deals may not even be possible if we had to kick them down the curb. So using their financing opposed to doing a syndication or an equity partnership deal has really proven itself to be valuable. Moreover, the energy engineering that they do has really been enlightening to us. So they came into our project and they do these kind of studies and surveys that tell you you're going to recapture this much money and you're going to do this. And we've used that, whether it was in our new construction project to model it or to just see what the benefits are in our existing project, like in Shelby. But it's a great tool because now we have this, we can say it and we can really go to people and say like, hey, we had energy engineering done. We know we're saving money. We know that we're doing a greener project, which is really important to the consumer today. And then most importantly, depending on how you write your leases, depending on how your hotel franchise is, you're able to recapture it, whether it's in room revenue or triple net. So it doesn't even hurt your profit and loss in most cases if you can design it right and get that, you know, bought by your franchise lenders and community.
Absolutely. And some of these projects had, especially the downtown Cambria, multiple sources of financing. You were mid-construction on the Shelby, Cambria. How did that interaction go? Working with the lenders, working with different sources, rejiggering your capital stack to show this new source that they didn't have experience with. How did that process go?
It went pretty well. I mean, it worked, especially in Detroit. Thankfully, our lender, TCF Bank, had worked with PACE before, so they had understood the process, and we just fit it into the stack. And we were also in an opportunity zone, so we were just looking at this from the standpoint of, hey, where do we slide it? And it really comes up to each project in its unique way. It's hard to say how it fit in each project because it really, came in. And Shelby, we didn't have any outside syndication. We didn't have any outside investors. We simply brought PACE in so we could free up liquidity that stayed within the project. In Detroit, it's a rather large project. So we were able to use PACE to limit the amount of cash that came out of our pockets so that we could go do these other projects. And in the industrial complex, we were able to do that. In all instances, the great part is we're able to recapture that, whether it was through the special assessment being recaptured in our triple net lease in Plymouth building and in room, call it room recapture fees. And we like to call those as either energy assessments or green energy tax. We get unique depending on the community, but most of our customers don't even realize that they're paying for the PACE program because they're happy that they're doing something that's causing energy efficiencies.
So to your point, there's a lot of people, listening in who are, have not worked with, PACE. They're considering it. How does it fit in? How easy is it? What are some lessons that you would, pass on to those folks here today?
I would definitely get with your lender early on and start talking about it, and also with your counsel, because if you can get the ball rolling quickly and engage the team, get Ethan on the phone or your local PACE rep to help you and sell it to your lender, because that's the first thing you need to do is get that lender on board and make sure they're comfortable with it. Because if the lender says no, then you're wasting your time. And we've been successful in taking lenders who had never seen PACE and getting them to buy in, even as small as some credit unions. So we were really surprised that once they understand it, they really shouldn't have a problem with it. The other thing is, if you're doing a construction project, I suggest you work with the PACE construction team. They're really great. They help you walk through their paperwork and their statements. And you have to separate what's an eligible cost versus ineligible cost. So kind of as Ethan mentioned earlier in the presentation, they're only funding for things that are going to benefit energy efficiencies. They're not going to pay for your new sofa. So you have to separate that in your sworn statement. And if you can do that early on and not have to reinvent the wheel later on down the road when you're ready to fund, it'll really make for a smooth approval and a smooth transition in funding your draws.
Perfect. And, why PACE equity? We talked a little bit about, working with lenders and getting them comfortable, but, why work with us from your perspective?
I had never even heard of PACE until we started our Detroit project. And Sonia Deli, who's our PACE rep or salesperson, I don't know, loan officer, whatever you want to refer to her, because we just call her a friend now. She's around, she's become a friend, she calls on us, she helps us through the whole process. She helped us to understand it. And they really encouraged us that if we use this program, it's going to help be part of a sustainable building process. It's going to help make our stack work. And the greatest thing is the people. I mean, once you deal with PACE, it's really like a warm and fuzzy feeling. And I'm not saying it because I was asked to be here. I'm saying it because I really believe in it. And I think the fact that we've used them on 3 projects and we're trying to use them on others speaks for itself. But the team stays with you all the way through, and they're your advocate. And if you use that team and you use it, it's really something that's great. And I mean, I spoke about all the other benefits that you have, but in our world, it's most important, especially coming through these trying times, to see who's going to be your ally. And having PACE as an ally, it really helps, because the team is not just saying, well, I'm sorry, this doesn't work, or, well, we can't fund the loan because of COVID. It was, how do we help you get through this? How do we do this? What can we do for you? And that's why we chose PACE, because we got that feeling from day one. And it started all the way from the introduction with Sonia all the way through the construction funding department. I would call all of them friends. I mean, I often email hellos and updates on other projects and things like that, because I've learned a lot, and we've taken those processes and used them in other projects as well.
Well, great. Well, thank you, Joe. And again, really appreciate you being here and taking a few minutes out of your busy time to speak with us and our audience here today.
You're welcome. Thanks for having me on.
So, you've heard a little bit about, this, but, just before we hit, some Q&A, and feel free to, put some questions into the chat as well. Joe was mentioning a couple of things about us that are unique. One is our experience. We've funded our team over 200 projects all over the country, and all different kinds of projects. We'll talk about that, in just a second. We're a direct lender. We have direct capital with in-house decisions. I actually sit on our investment committee, which is our 3 principals. And we, again, I really like what Joe said. We work with you all along the way. There's always a decision maker who's, working with you on the calls, making sure that, we're getting done what we need to get done. Our fast track funding process. This is very unique. The challenge in PACE, for anyone who's done a historic or new markets project, is the kind of the back end side of it. The engineering, the approvals, the compliance and structuring, so to speak. We manage all of that ourselves in-house. We're going to look at how that process works in just a second. And then again, Joe, I should just let you handle this slide. We're really committed to that local, relationship and local presence. We've got that on the ground all over the country, and our team, is ready to work with you for your specific project. So what's also unique about PACE Equity is that we really pioneered the use of PACE as a capital stack tool. The first new construction, the first development, the first to integrate, all sorts of tax credits and complex forms of financing. So we really have that experience. If you're working on a complex development project, whether that's complex like the capital stack or just all development projects are complex, we're here and we're ready to be your partner. What really, though, makes us unique, again, is this fast track funding process. There is an incredible amount of work that we do on your behalf behind the scenes. A lot of people don't, even understand the value of the energy study. We don't let things like that hold up our process. We do all of the work ourselves in-house with our energy and transactions team. The energy study determines your funding amount, amortization, if you can even get any funding at all. So we mitigate that risk by doing that in-house and doing an upfront analysis for your project to make sure that you've got the surety of not only pricing through our direct funding facility, but also the funding amount based on your specific project. And this is what our customers really value. It's our process, it's our dedication to the transaction, having, again, direct decision makers. So we put a lot of, value on that process for our clients, making sure that we're living up to what we're committing to up front. Finally, we'd be happy to work with you wherever you're at in your process. Completed, mid-construction, going through design, trying to find financing, trying to optimize your capital stack. Please make sure to visit our website, www.pace-equity.com. We can do, a full project analysis and term sheet. We can do a kind of an overview, no obligation funding analysis, but we're ready to work with you based on your specific project and make sure that we can, optimize what we can fund for you. So we've got a couple of minutes left for some Q&A. I see that there's a couple of questions in the chat, but please make sure to put into the chat any other questions you'd like to have answered. First, from Richard, on projects that include ESG financing, can PACE still be introduced in the capital stack? Absolutely, and that's a great question. We work with all different forms of financing. There are some that present some challenges. So again, we think of ourselves, we're very specific. Each of these projects is very unique just to make our lives a little bit more challenging. But, by and large, we can work with, especially if we're in on the front end, to Joe's point, almost every different form of financing. And then we have two from Janice, who's a lender in Florida. Janice, we'd love to talk more afterwards about partnering together and working with you on some projects, whether we bring you in or you bring us to one of your clients who's looking for some additional financing. The minimum and maximum, that's a great question. Each project, again, is a little bit unique. Sometimes we can fund, 10% of the capital stack. Sometimes we can fund 25%. That's our general range. Generally we fund projects that are, a couple of $100,000 and up. There's no real upward limit. So we'd love to look at a specific project from an interest rate perspective. We're generally in the 5% right now with where, treasuries are. Definitely depends on the project. And again, we'd like to look at it, specifically and come up with a value that adds, for your client and for your bank as well. We have a question from Jay. Where does Oklahoma have PACE established? So that's a great question, Jay, also. And, just to answer that a little more broadly, once a state passes legislation, it doesn't just mean the whole state's covered. We can't go, say, fund a project anywhere in that state at that moment. We set up a special improvement district that then works with the cities or counties to join the district, which allows us to close financing on a specific project. There's 5 or 6 counties in Oklahoma who have set that up today, with a lot more coming. So Tulsa, Oklahoma County, there's a handful of others who are ready. But Jay, I tell you and anyone on this call that by and large, we can work with you to get that process done as a part of a project. We've done that, in many different cases. We just did that in Schenectady County, New York, for a client of ours. So we'd be happy to look at that for your specific project as well. Has PACE worked with prefab construction projects? We have. In fact, Joe, wasn't the Cambria downtown Detroit, wasn't that a prefab? Am I remembering that correctly?
It was, yeah, and it was a pretty unique. I think it was one of the first for PACE and for our lender, as it's a new process. And what we did was we simply worked with the prefab provider to separate the eligible costs in their budget to what the fixed costs are from our sworn statement. And we were able to get those fundings to go through. Ethan, you had to approve, I think, some specialty, because when you do that, there's a tremendous amount of money that has to be put out up front,
right,
before those units actually hit the unit. But we worked through it. We got the units on site. It came out amazing. And we're so thankful, because had we not done that process, that project would probably be about 30% over budget today.
Wow. Great. Well, thank you for jumping back in there. And then follow-up question from Ray. Do we work with residential projects? We work with any kind of commercial project, including multifamily. We do not work with single family houses. unless it's a build to rent product, which we think of as more multifamily, and we don't fund residential condos. Commercial condos, work, but not residential. So again, just kind of commercial multifamily, 5 units enough. All right, well, that's all the questions. Thank you everyone for attending today. And again, Joe, thank you so much for taking some time to join us and share from a customer perspective. Again, we're here to support your needs across the country. Feel free to follow up with us, and one of our local sales team members will be happy to reach out and work with you on your specific project. So thanks everyone. Continue to stay safe and keep the reopening going, and have a great rest of your day.
Thank you. Thanks, Ethan.
Thanks. Take care.